Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate, with host Glenn Sutherland.
Hello, and welcome to another episode of A Canadian Investing in the U.S. This week I wanted to talk about when it would make sense to pay off your rental property, the mortgage on the property, that is. How about we start tackling this by thinking about what the different things we could do to pay down the property would be, and then reverse and say when that would make sense and when it wouldn't. I know one of the first ones I was thinking about was, people do like the partial payments, so or it's a partial pay down. So they'll go and pay down a large chunk of the mortgage. It's like, we can pay down like 15% or 20% every year, so we're going to pay a big chunk down against the mortgage. And the thought behind it is that, you're building all this equity, right? But you're not actually getting to get the money out of the property. It doesn't improve your cash flow. So doing this doesn't actually improve your cash flow until the property's actually paid off. So the purpose, I guess, is just your peace of mind that you have all this equity in the property. But if you have cash to do this, would it not make more sense to go buy a second property to move up your cash flow rather than to pay down the property? I know there's other ways that you can do this, and some of it would be like you could move your payments up to bi-weekly, so you end up getting a few extra payments every year. Yeah, once again, you're just putting more money into your equity, and I guess it depends on what part you are or what stage you're at in your growth. But let's just break it down. I sort of break it down into like two levels when you're or not levels, but progression spots when you're doing your investment in real estate. And off the start, in my opinion, you should be leveraging as much as you can, refinancing and getting the money in order to make more money with that money. And I would say have a goal that's related to having a certain amount of cash flow by a certain date, maybe a certain number of properties you should have, so that once you hit these goals, you're done. You're done the growth stage or the leverage refi stage, and you're ready to move on to the second stage, which in my opinion would be to remove the debts. So this is when you're close to your retirement, and you just want the comfortableness of not having the large debts on your portfolio that you may not be able to, even if these are Canadian properties, be able to requalify for whenever you're doing your renewal. The properties I've been getting in the States, you don't have to do this renewal process. You can go sign a 30-year mortgage that actually lasts 30 years. So it's not the same thing to have to worry about. So let's get back to the refi stage and the growth stage of your career. So when you're doing this and you're using all the credit you can get your hands on and refinancing money out of your property so you can keep buying more and more properties, it actually works that you'll get more money. I read an article today, and it was saying, if you pay down your mortgage, then your cash flow will increase. Say you got $100,000 left remaining on your mortgage, you could take that money and pay down the mortgage, and it'll move your cash flow from $500 to $800 a month. Or you could take that $100,000 and go buy 3 to 5 more properties, and you just earned $400 or $500 in cash flow per property, and you're way ahead by having more properties. That's the more leverage on the properties, even if you're paying a high interest rate. One of the things you're actually going to hurt is your debt to income ratio, which is a lot more important in Canada than in the United States. For taxes, when you're doing this, it actually creates a lot more interest, which you have a lot more write-offs, which means you get a lot larger return, and you can write off a lot more of the property when you're doing it in the leverage stage. Like I said just a minute ago, it'll help your cash flow, so you're going to create a lot more cash flow from leveraging your properties than paying them down. So back to the second stage, when you've hit your goals, you're all happy. I'm ready to start paying everything down. I've gotten to the adequate amount of properties. I would suggest to focus on one property at a time. The reason I'm saying one property at a time is, going back to my original point, is if you go and you're spreading out, you're just paying down a whole bunch of properties, but you don't actually pay any of them off, you don't actually increase your cash flow, which actually hinders your ability to pay down the mortgages. So say you find which mortgage do you have that has the least amount of debt on it. So it has like, oh, we got the $50,000 say on this one mortgage. We're just going to focus on paying that mortgage down. Once that mortgage is paid down, you're instantly going to jump to a point where you're making an extra, I don't know, $300 a month in cash flow, because part of that is mortgage. Say you have a $300 mortgage on the property. All of a sudden, that's gone. You can take that $300 and now compound it, right? So you have more cash flow to pay down the next property from paying one down completely, rather than instead of paying down $50,000 on that one property, you pay down like $5,000 or $10,000 on all your properties. It didn't actually change anything. You're still making the same payments on everything. And also, it gets you a good win. If you actually get one of your mortgages paid off, you'll feel good for actually getting one of them done. Your debt to income ratio will actually improve. So when you're paying down each of these properties, all of a sudden you're going to have less debt load, and it'll make your ratio easier. So it'll make it easier to buy properties in Canada. No matter what, your cash flow is just going to continue to grow. So once you pay down a property, your cash flow will grow. Another point about when you're paying this down, you actually are going to affect your credit score, which a lot of people aren't going to think about. But your credit score is going to take the hit, because the banks have factored in that they're going to make this much money, set amount, like $1,000 or $2,000 or $4,000 off you every year. They have that all budgeted in. If you go and pay these off, you can start paying down extra payments on top of what your actual schedule is. It's actually going to make your credit score go down, because that's not what they want. You're going to decrease the amount of interest you have to write off. So you actually will end up paying more taxes. Like during the growth stage, when you're buying properties, you probably aren't even going to be paying income tax, because you'll have so many acquisition costs and everything else that hopefully you can write it off, especially if you're buying in the States. They have a lot of extra write-offs and special things for LLCs. I'm going to have the accountant on the show in the next few weeks. He can talk to that. But onto like another idea, like when you're trying to pay down, like when you're trying to remove the mortgages, is to use a line of credit in conjunction with the actual mortgage to pay it down. I might actually do a full episode on this, but super basic is that you can take the line of credit and just pay down an extra like $1,000 on your mortgage, have the rents from the properties refund the line of credit, so back to like a zero balance or close to. And that's the difference between simple interest and the interest that the banks use. And by using this technique, you'll actually shave like a lot of years off your life. There's a lot of people that wrote books on this. And to get on to the final stage would be the retire stage. My main point is to not sell anything. One of the points to all this is to like create legacy wealth that'll last for you and for your kids and your kids' kids. You don't want to sell this. I've had like many people when I'm telling, oh yeah, I'm buying this, I'm buying this, I'm buying this. They said, and then what's the exit strategy? When are you selling? Well, ideally never. I will probably refinance and get my money out of the property, but I don't really plan to sell. And this isn't to be confused with, I am selling my properties in Canada. The reason is that I can sell one and buy 5 in the States. So it's economies of scale. I can do much more with the money down there. Once you get to this point where you're starting to pay down your debts and everything else, you're going to want to put extra protection on the property. So you're probably going to want to move the properties into a trust, and that actually makes it much easier to convert to your children for tax purposes. I think I got through all my points that I wanted to talk about on this. Please feel free to put some comments below, and I would love to comment back with you. I wanted to start doing like these little tips of the week, and this is totally off topic. I found a lot of people actually didn't know this super simple tip. I had to do it whenever I was just trying to pay my insurance in the States, but the same thing happens when you just want to buy gas in the States, where they ask you for your zip code whenever you're trying to use a credit card that's like a pre-auth credit card, where you're just swiping it at the pump, or they're trying to take your credit card on the phone. And if your credit card is registered to a Canadian address, it's going to have a postal code instead of a zip code. So the way you actually type this into the gas pump or tell your insurance company to run your credit card is you use all of the numbers that are in the credit card, and then you add 2 zeros at the end. So say your postal code was A1B2C3, then your zip that you would type in on the pumps or to the credit card or to anyone who's trying to run a card on your bill. A bill on your card would be 12300. Anyway, just a little tip for you. Like I said before, if you have any questions, just send me an email, Glenn at GlennSutherland.com. Go to the website, GlennSutherland.com, or check out the YouTube, iTunes, or Stitcher channel to subscribe. Thanks for your time, everyone. I'll talk to you next week.